Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel daily at 1:30 p.m. Eastern Time. Before I go any further, let me go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As a reminder, my presentation and my the focus of the channel in Bookmap Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first step is planning, and I use positional analysis. Other traders use technical analysis or fundamental analysis, and I use positional analysis. And what that means is I look at how traders and market makers are positioned in the options market, and then how those positions change from day to day to develop a thesis regarding volatility and the expected trading range for a day, as well as a directional bias. And the second part is execution, and that happens after the open. And I'm looking at real-time order flow in Bookmap and market maker hedging flow in Spotgamma Hero to confirm my thesis and for trade setups. And questions and comments are welcome. I tend to watch Bookmap Discord more than YouTube, but I'll try to answer questions in both. And please make sure your questions are on topic, related to the topics that I discussed above. All right, let's get started. And let me do a quick check for questions. Okay, so let's get started. What I'm going to talk about today is first news. And as we all know, the CPI report came out yesterday. The S&P 500 and NASDAQ and Russell 2000 and the Dow all gapped up substantially, as did most stocks. I think the S&P gapped up after the data report at 8:30 a.m. Over 3% at the cash open, and then traded down for the rest of the day. And there are a lot of questions about that. There was a question in Bookmap Discord, the chat room, about that, and I'll cover that today. I'll go over that and talk about how you could have expected that given the data shown by Spotgamma. And of course, the big event today is the FOMC announcement at 2 p.m. and then the press conference at 2:30 p.m. So I will be on live during the announcement, and at that time we can take a look at we'll take a look at the S&P 500 futures, and also the market maker hedging flow and Spotgamma Hero, and see if we can gain any insight. And then for the rest of the week, there is a retail sales report tomorrow at 8:30 a.m. and of course the big options expiration on Friday, and that is the that is the monthly and quarterly options expiration, and it's a big one as typical. Okay, so the first thing that I want to address is the reaction yesterday and how the market behaved, gapping up so strongly and then falling after that. And then after that, I'm going to talk about the position analysis for today, and then we'll look at some setups. And then after that, again, we're going to watch the hedging flow in ES. So yesterday, I'm sorry, I want to do a quick review and just show you how important it is to understand how market makers are positioned, not only every day, but also particularly in front of large events like the CPI report yesterday. So let's go over the information that we had yesterday. And this is the Spotgamma founder's note for yesterday. You'll note this is 12/13. So this is the AM report yesterday. And I pointed out, first of all, this note that was very important, kind of summarized what the data confirmed, is that unlike the previous CPI report, which in that case market makers were positioned far down in the negative area of the gamma curve. So gamma notional for SPY was something like -17, -1800, and that provided the vanity fuel for a rally after the CPI report. So what that means is that traders were long puts, market makers were short puts, and they were short futures to hedge their delta exposure. And as the market rallied after the CPI report, implied volatility dropped, and market makers could buy back their short hedges. And that helped to drive that rally higher after the previous CPI report. That situation did not really exist for the CPI report yesterday. And we can see that gamma notional for SPX and SPY was just mildly negative. So again, there's no vanity fuel to fuel the rally further than what happened at the open, or right after the report up to the open. And also, I pointed out yesterday there was pretty much an equal positioning in calls and puts, and we can look at the S&P 500 charts for today, the absolute gamma charts. And this is for SPY, showing a pretty similar situation to yesterday. With an pretty much, I'm going to actually, let me zoom in on this. So pretty much an equal weighting between puts shown down below the zero value, and then this is the 400 level, and calls above. So that was a pretty neutral environment yesterday. And we can also look at the Vanna model, and this is for today. Let's look at yesterday. It's still fairly neutral. And what this shows is that market makers would not really have much hedging to do. And this actually, so this is for yesterday. So this is what the Vanna model looked like yesterday morning. So that is based on the information at the close on Monday. And keep in mind that the SPX gapped up to about 4,100 yesterday. And so let's go back and look at the founder's note. And this, again, this is for yesterday. And given a, so we saw that based on the information here in the founder's note, that there was SPX and SPY had mildly, the market maker's position was mildly negative gamma notional. And with the gap up to 4,100 for SPX, and that's shown right here, then that puts market maker's position on the positive side of the gamma curve. So at the open, market makers had a positive gamma position. And let's go back to the Vanna charts now. So in the case at the open yesterday, the Vanna model most likely would have looked something like this, meaning that market makers would need to, their delta exposure would increase as price increases, and they would need to sell futures to hedge their delta exposure. And also keep in mind that implied volatility was dropping substantially during the day. So hopefully that provides some explanation of what happened yesterday. And if anybody has any questions about that, please let me know. Okay, so that was the review of yesterday. Now let's talk about today. And let's go to the founder's note for today. And actually, I want to take a look at ES in Bookmap, and the support and resistance levels have not really changed that much. There have been some other changes, but support and resistance levels still near the approximately same levels, and they're shown on this chart. So what this is showing is in this column labeled SG, those are Spotgamma cloud notes, and then this C levels, that's my own cloud notes, and I'm marking the support and resistance levels and other levels like the big round number levels. So the support and resistance levels are provided by Spotgamma, and they're in terms of SPX prices translated to ES. And right now, Spotgamma is using a 25-point difference between ES and SPX, and I checked this morning. It looked like there was an even greater difference. So this morning it looked like ES reversed higher before the open at the 0 gamma level and rallied from the open up to this resistance level, and that is that's actually the 3960, or I'm sorry, the 4060 level in SPX, translated to 4085 in ES. Now, as far as shifts in the key levels, there were quite a few shifts yesterday. First of all, the SPX, SPY, NDX, and QQQ volatility triggers all shifted higher. And again, the volatility trigger is Spotgamma's flip level above when price trades above the gamma, the volatility trigger. That means that market makers are on the positive side of the gamma curve. So that's the case right now. Both SPX and SPY are trading above their volatility triggers. So they're in a right now should be in a positive gamma regime, or again, a positive gamma, positive part of the gamma curve. Also, the put wall for SPX and QQQ also shifted higher, and the call wall for SPX, SPY, and QQQ all shifted higher. So a pretty substantial shift higher in all these key levels, the volatility trigger, put wall, and call wall, although the key gamma strikes, the strikes with the largest absolute gamma, remain the same. So for SPX, the key gamma strike remains 4,000, and for SPY it remains at 400. And let's go look at the data again. And the other thing to note is the gamma notional for today. Shifted even more towards positive. So now the gamma notional for SPX is slightly positive, and for SPY it's slightly negative. So this is very neutral, indicating that market makers should not necessarily have to hedge in either direction. Again, this is based on data yesterday, and now with the move higher, prices probably shifted more towards positive gamma, and that may mean that market makers may need to hedge against price action. And let's go back to the S&P 500 charts. Go back to SPX, and here's the 4,000 level, and just this is has been the key level, the absolute gamma strike or the key gamma strike, for quite a while now. And things are a little bit more clear with SPY, but again, the key gamma strike is still at 400. And their calls up above at 405 and 410, and puts below from 380, which is still the put wall for SPY, up to 410, which is the call wall. And let's look at the Vanna models. Let's go to today. So again, what this is showing is how market makers' delta notional, their delta exposure, changes with changes in price, implied volatility, and time. And changes with price and implied volatility are shown by the green curve. And the way to interpret this is just to draw a line through here that makes sense. And this is very neutral. And if the line was shifted like this, for example, like it has been for most of this year, that means that market makers' delta exposure increases as price decreases, and they have to sell futures to hedge their delta exposure as price drops, and they have to buy futures to hedge their delta exposure as price increases, so they can buy back their short futures. And then it works just the other way around. And so this this top line here is typical of a negative gamma environment, and this bottom line here, the sloping from left to right, is typical of a positive gamma environment. And we can just see how it has shifted from day to day towards a more neutral environment for SPX. So I think the easiest way to interpret all this information is just to look at this Vanna chart. And that gives you a good indication of what market makers may do. And keep in mind, this is based on data that was available at the end of the session yesterday, at the close yesterday. And one last thing to point out, let's take a look at, this is an options chain. This is Thinkorswim looking at an options chain for SPX. And this is, let me actually, I just want to isolate this week. So this is showing today, and remember SPX has options that expire every day of the week. Close this, look at the, so this is the rest of the week. This is today, tomorrow, and then there are two 16 December expirations. One is the AM settlement and one is the PM settlement. So what we're looking at here, and this shows the implied volatility and the implied move for every day the rest of this week. And note how high it is today at 133. And expect that to drop substantially as soon as soon after the announcement and also the press conference. So that's how traders and market makers are positioned ahead of the announcement here. And one other thing I want to point out before the announcement is this is a spreadsheet that I keep every day, and what it's showing, this is my watch list, and I track the key gamma strike for every stock in my watch list, and I take this from Equity Hub, and what I do in the morning is I shift this column from the previous day over to the right, so that is the previous key gamma strike, and then I note the new key gamma strike. And the green means that the key gamma strike increase from the previous day, and we can see that with both Netflix and Nvidia. And we'll look at some stock setups. I just want to go over this before the announcement. So these two stocks have been in play recently, both Netflix and Nvidia, to the upside. So this is just pretty consistent with what they've been doing for the last at least week, and Netflix even longer. And then note the drop in the key gamma strike for Tesla, and Tesla has also been in play, and it has been in play to the downside. It's been falling, so this is pretty typical of Tesla with a falling key gamma strike. So let's, I just want to kind of set the stage for some setups that we may look at after we watch the announcement. And let me ask you, is that what you want me to do, is watch ES and watch watch the hedging flow during the announcement, and again, let me know what you want to see, and let me check with YouTube here. Okay, traders in YouTube want to see the S&P 500, and then we'll go over here to Spotgamma Hero and watch ES as well. So we can see so far that traders have been looks like mainly buying calls, not doing much with puts, but buying calls today. And this is most likely in SPY. Let's just do a quick check. I'm going to just change the order to alphabetical order. Yeah, so this is SPY and SPX. So we'll watch ES, and this ES signal combines options trades in SPX and SPY. So we'll shift back between the two. I wish I had a way of popping out this window, but I don't, as far as I know. And one quick thing that we can look at while we're waiting. Let's go to the CME Fed Watch tool. So this shows now that traders have a pretty high expectation for a 50 basis point rate hike. So this shows the current target rate, and this is the expectation for 50 basis points. And that has increased. That increased from Monday to yesterday to today. Okay, so I've got about a minute to the announcement here. So again, we know that positioning is fairly neutral at this point. Let's just check VIX real quick. VIX is pretty much flat for the day. Okay, so here's the announcement. I know there's a delay on YouTube. All right, so as expected, the Fed raises the Fed funds rate by 50 basis points. So this is as expected. And maybe some organizations were predicting a 25 basis point rate hike, but I think the consensus shown by the Fed Watch tool was for 50 basis points. And it looks like the statement is also indicating that ongoing rate hikes are appropriate. And that may be what's causing this reaction. Let's take a quick look at Spotgamma Hero here. What I'm going to do is switch the look back period. Let's switch it to 5 minutes so we can see better what traders are doing. That may be too noisy. Let's go back to Bookmap. And it looks like price dropped right down to the 400. This is a SPY 400 key gamma strike and reversed higher at that point. All right, in the subchart, I'm looking at iceberg trades, and these are large orders that larger traders use to hide their size, and it looks like larger traders are buying with iceberg orders. And it looks like this drop, this yellow line shows stop orders, and it looks like this move down triggered some sell stop orders. And this blue line here is cumulative volume delta showing buys minus sells, and that is pretty neutral. And in Bookmap Discord, Bernard asked, what do I think about VIX falling ahead of the Fed meeting? Well, it really wasn't falling much. Let's go and see what it's doing now. Whoops, wrong one. It's flat for the day. And let's go look at the chart. We'll just zoom in. And this shows that the change in VIX today is minus 0.02. So I would say, in response to the question, is that traders were already positioned the way they wanted to be ahead of the announcement. Let's go check Spotgamma Hero again. I'm going to change this look back period just a little bit to see if I can smooth that out just a bit. So from this point of view, it looks like they're buying puts. Let's see if this helps. Yeah, this looks like they're selling puts. Then last 5 minutes showing they're starting to buy puts again. So this is a little bit more clear. It looks like traders are taking on negative delta positions here in SPY. And this is changing that rolling window to 10 minutes. Let's go back to Bookmap. So now it looks like price bounced up from the 400 key gamma strike, chopped around the 0 gamma level and 40-50, and then has now dropped down to the SPX 4000 level. Let's just take a look and see what's below here. And take a look at all the aggressive sellers coming in there. Those pink dots show those are market orders. So each dot is market buy minus market sell. And here the sellers were dominating down to the 4000 level and just above the volatility trigger. So at least for right now, that support level has held. And that is also the SPY volatility trigger at 399. So let's go back and check and see what options traders are doing. So it looks like, as you would expect, that traders are starting to buy calls and sell puts as price has dropped down to that key level. and it looks like this price is not quite right. I have um, right now SPY trading below 400, somewhere between 399 and 400, and this is showing that SPY stopped. Now it's a little bit delayed, so that's at 207, and there we go. So price appears to be a little bit delayed here. And Drew in YouTube asked, could you clarify taking on negative delta positions? Yes, that would mean selling calls and or buying puts. And there's no way of knowing whether they're buying or hedging. That's just what traders are doing. So hero is shown in terms of delta. So again, a negative delta position would be traders are buying puts and or selling calls, and a positive delta position would be traders buying calls and selling puts. And that appears to be what is happening now, and that's potentially what's driving price higher. And I have the rolling window set to a fairly short time frame, 10 minutes here. So this is giving us pretty quick data. Now it looks like that may be short-lived. Okay, I'm going to go through a couple of setups from this morning. And one thing I want to show is the watch list that I posted this morning in Bookmap Discord. And I ranked, this is my watch list, ranked from the strongest hero signal to the weakest. And what this is showing is it ranks the hero signal in terms of the last 5 days and the last 30 days. And the last 5 days is shown by this colored range of this ellipse, the slider, and the gray shows the range for the last last 30 days. So this shows that Amazon was at the top of the list with stocks with high or strong hero signals. And the way I use this list is I look at stocks on either end of this list. So remember that I noted that NVIDIA had been, that was one of the stocks with the rising key gamma strike, and that had been in play to the upside for bullish trades. And then Tesla here at the bottom of the list again with the weakest hero signal, and that's been typical for a while now. So let's just run through those quickly. I'm going to close this. Actually, let's go back to the full day rolling window here. I'm going to rank this by hero signal again and take a look at, now take a look at Amazon, and I'm just talking about the morning setup here. And this is just to give you an idea of how you could have used this information. And let's separate puts and call transactions here. And we'll go through this for a couple of minutes and then go back and check on the S&P 500 again. And I'm going to zoom in on a bit. And what I saw was this call divergence setting up a bullish trade in Amazon. It didn't go very far. There wasn't much range in Amazon, but notice this block trade comes in. Traders buying calls, and then they continue to buy calls, and that sets up this long right here. So let's go take a look at that in Bookmap now. So here's the morning setup. Not a lot, but it was a pretty clear setup. The reversal at the point of control there, and just good for about a 1-point move. So that was Amazon. And the next ones on the list were Block and Snow. They're on my other computer. And so let's go to SPY. It was there was a good setup in SPY this morning. And since then, Amazon has reversed sharply lower. SPY. So let's go back to Spotgamma Hero here. Look at SPY. It was also on the list. Let's just check. We're still now back to the one-day rolling window. And traders were buying calls this morning, and actually it looks like this is showing that they continue to buy calls. Now this is taking a cumulative sum of all the transactions for the entire day. Let's zoom in on the on the morning and see the traders were aggressively buying calls this morning, and that really set up a nice long in SPY this morning. So let's go back to Bookmap now. Go to SPY. Let's go back. All right, sorry about all the screen maneuvering, but this was a good setup this morning. Seeing the traders buying calls, and the first good entry after the open was this, looking at this trend break and the breakout above that trend break as all the aggressive buyers came in, shown by the green dots there. And then another trend break, aggressive buyers coming in. And then this 405 level was noted as a resistance level in the Spotgamma AM Founders Note. So that was the target. SPY reversed lower at that point. So very nice setup in SPY this morning. Let's go back to the list. And there's one other setup that I want to point out. And there were actually two. We'll take a look at Tesla. And there was a good setup, good correlation between options trades and hero and price action in QQQ in the morning session. And let's look at that. And then we'll get back to the live market. So there was the setup this morning. And one thing to point out, what I do, so when I ranked my list from strongest signal to weakest, I'm looking for call buyers. So that's what and that's why I have the hero signal separated into puts and calls. And again, when I'm looking for longs, I'm looking for call buyers. And the reason is that when traders buy calls, market makers are selling the calls, and they have to buy stock or buy the underlying to hedge their delta exposure. And that's a strong force that can continue to drive price higher. So that's what I'm looking for a bullish entry. Let's zoom in a bit here. And we'll see the same thing, or pretty similar to SPY this morning, is that traders were buying calls, shown by the orange line here. And they started buying puts, and then they changed and started selling puts. Let's go back to Bookmap now. And there's the setup this morning in QQQ. Pullback entries. Looks like this was the best one. And the price target, if you started right from the open, would have been this 290 key gamma strike. And it looks like QQQ continued on up to the 291 strike. Okay, back to the live market here. We'll take a look at SPY. looks like SPY has found value, at least for the short time, right at the 400 key gamma strike. And I have this shown incorrectly. This 399 level is actually the volatility trigger. So that's a very important level. Let me just change that on my spreadsheet here. Just to avoid any confusion. So again, this 399 level is what I'm looking at, is actually the volatility trigger. And that's where price initially reversed higher at the 400 key gamma strike and then went down to the 399 volatility trigger. And let's go back to ES. And again here I'm showing the same levels on the ES chart. The 400 key gamma strike and the 399 volatility trigger just above the SPX 4000 level. And let's do one last quick check of Spotgamma Hero. And let's go back. We'll go back to SPY. Change our rolling window back to 10 minutes. And now traders have been selling calls and buying puts. And I'm gonna sign off here. My time is up. It looks like the press conference will start in just a moment, and that should get price moving again out of this 399 to 400 range in SPY. And back to Bookmap. Okay, let me take a look for any final questions, and then I will and Drew asked, would that reverse if it were negative gamma? And no. Buying a put is always a negative delta position, and selling a call is always a negative delta position. And the key gamma strike is the strike with the highest net or positive gamma. And I showed that in the S&P 500 charts. And if you didn't see that, go back and watch the recording. So right now, the key gamma strike for SPY, the absolute gamma strike, is 400, and the key gamma strike or absolute gamma strike for SPX is 4000. And the gamma flip level, Drew is asking about where gamma gets neutral for market makers. And that is really, for indices, that is at the volatility trigger. And that is Spotgamma's proprietary gamma flip level. And that's where they shift from positive above the volatility trigger, positive gamma above to negative gamma below. And Noah, you're welcome. Okay, it looks like Powell has started speaking now, and let me just check Discord quickly for questions. I don't see anything, so I'm going to stop now. So thank you very much for attending. Thanks for your questions and comments, and I'll see you tomorrow. Thanks again. Bye.